Visual compression tools have become indispensable in a profession where time is scarce and data is infinite. Investment analysts and portfolio managers constantly navigate a fog of information, economic reports, earnings updates, sentiment shifts, and geopolitical tremors. Amid this complexity, heat maps offer a unique lens. These color-coded, size-weighted matrices don't just simplify the market, they surface patterns, misalignments, and risks that might otherwise be buried in spreadsheets. We've recently launched a stock, market, and economic data component to our Premium Pro subscription on InsightOne, with index-level heat maps being a core part of the data content and visualization. Heat maps are more than just digital eye candy and serve as a first-response visual dashboard for real-time sentiment, sector rotation, and stock-specific volatility. This video explores how analysts can use heat maps to extract insight, guide deeper analysis, and sharpen decision-making. A heat map is a structured visual representation of stock performance, often broken down by sectors and weighted by market capitalization. In the provided chart, each square represents a stock in the S&P 500. The size of the square reflects the company's market cap. Apple and Microsoft are enormous, while color indicates performance, deep red for losses, green for gains, and the intensity scaled by percentage change. The layout typically mirrors sector groupings, allowing analysts to spot individual stock moves and entire industry trends. If all the large squares in electronic technology are red, it signals something broader than stock-specific news, likely macro, regulatory, or sector-related pressures. In this case, when we took this screenshot, the market was still reeling from the uncertainty associated with the Trump tariffs. This structure means the map isn't just showing prices, it's encoding market psychology. The first insight a heat map provides is market breadth. When nearly the entire screen bleeds red, it's a signal that the market is experiencing a risk-off day. Analysts can quickly assess whether weakness is concentrated in a single sector, for example, tech after weak earnings from Nvidia, or pervasive across the index, perhaps after a disappointing inflation print. On the heat map shown, tech and consumer discretionary names are almost uniformly red, suggesting a risk-off mood possibly tied to a macro concern or earnings season disappointment. But pockets of green, like Netflix's plus 2.7% move, stand out and raise questions. Is this idiosyncratic? Earnings-driven? A contrarian trade? The heat map allows for fast triage, deciding where to dig deeper. One of the key advantages of our heat map tool is its ability to adapt to the specific needs of an analyst. Rather than offering a one-size-fits-all snapshot, the platform allows users to tailor what they see based on market scope, sector focus, time horizon, and trading activity. Analysts can begin by selecting the market or index they want to analyze, whether that's the S&P 500, NASDAQ 100, or international benchmarks like the FTSE 100. For those focused on particular themes or strategies, custom watch lists can be loaded to create a bespoke view aligned with a coverage universe. From there, the heat map becomes even more insightful by allowing users to zoom in on specific sectors. A single click on technology or financials instantly filters the view, making it easier to isolate patterns, spot leadership, and assess internal divergences across subsectors. This drill-down function is invaluable for identifying where capital is flowing or fleeing within industries. Another powerful feature is the ability to shift time frames. Analysts can toggle between hourly, daily, weekly, or 12-month perspectives. An hourly view might highlight intraday sentiment after a key earnings report, while a 12-month look can help surface long-term winners and laggards, informing thematic or valuation-driven research. To go a layer deeper, the tool also supports overlays for relative volume and volatility. This adds texture to the heat map, helping analysts distinguish between quiet, technical moves and those driven by real conviction or uncertainty. A stock that's flat but trading at 3x normal volume may deserve more attention than one down 2% on light activity. Taken together, these features turn the heat map from a passive display into an active decision-making interface, perfect for scanning, filtering, and prioritizing what matters most in real time. Heat maps are particularly powerful for monitoring sector rotation. When cyclical sectors like industrials and consumer discretionary sell off, but defensives like utilities and healthcare hold up, it suggests investors are rotating towards safety. In this example, we see widespread weakness in technology services, electronic technology, and retail trade, typically growth-sensitive areas. Meanwhile, some defensive names in health technology and utilities show more muted moves. That relative strength could hint at capital shifting in response to macro uncertainty or interest rate expectations. For an analyst, these are key signals, clues that drive further research into sector-specific catalysts or macro overlays that explain the shift. Heatmaps also spotlight outliers, companies whose moves deviate significantly from their peer group. Nvidia down minus 5.15% when the broader market is down minus 2% is one example. Is this a valuation compression story? A negative data point in the supply chain? A signal of profit taking? Similarly, Tesla's steep drop of minus 7.09% in a down market begs scrutiny. Was this an earnings miss, a regulatory headline, or a guidance cut? These kinds of outlier moves often offer fertile ground for alpha generation, whether through long-term value investing or tactical trading. A well-trained eye can use heat maps to filter noise and focus on the anomalies worth explaining. Heat maps become particularly revealing during macro events, CPI prints, Fed decisions, jobs reports, or geopolitical shocks. In such moments, the speed of reaction is critical. Seeing utilities green and financials red after a surprise rate cut, that's a visual confirmation of yield curve expectations changing in real time. The April 2025 heat map snapshot likely coincides with a macro catalyst. Financials JPM, BRKB, Massachusetts 5 are broadly red, suggesting either a softening rate outlook or credit concerns. At the same time, energy stocks are slightly more stable, perhaps due to a commodity price move. These real-time visuals help analysts contextualize economic data within market response, offering instant hypothesis testing. Like any tool, heat maps have limitations. The most prominent is visual weighting bias. Because they're market cap weighted, mega caps dominate the view. AAPL and MSFT's moves overshadow smaller firms, even if the latter have greater percentage swings. Another pitfall, heat maps show price action, not causation. Without accompanying news or context, analysts might overinterpret moves. A red stock might be reacting to a benign technical factor, not a fundamental deterioration. Finally, not all market participants are represented. The S&P 500 excludes many small caps, international names, and private companies, limiting the breadth of insight for globally diversified investors. For skilled analysts, heat maps aren't endpoints, they're launchpads. Seeing red across semiconductors might prompt a reverse DCF on AMD or a check on Taiwan exports data. An outlier gain in a biotech stock could lead to a review of FDA trial data or insider buying. Modern platforms allow users to overlay earnings calendars, economic indicators, and news alerts directly onto heat maps. This contextualization turns raw visuals into robust narratives, linking sentiment with fundamentals and visuals with valuation. In the modern analyst toolkit, the heat map is no longer decorative. It is diagnostic. It tells stories that deserve deeper analysis, highlights risks before they hit the P&L, and offers insight that can be sharpened with valuation and qualitative overlays. Used wisely, heat maps offer the kind of edge that every analyst seeks: pattern recognition at scale and visual intuition backed by data, and the ability to move from market-wide chaos to focused clarity.